There's so much fear and greed that comes into crypto that it always decouples. Um,
Yeah.
we just because look, the reality is everybody's hopes and dreams are in this trade. This is the only way to unfuck people's future, and so it sucks people in too late. Obviously, it always does, and it's a problem. But it's a feature, and the indicators you built before actually really help understand where are you in the FOMO cycle, because it's basically those indicators put together are basically FOMO.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal talks crypto and Bitcoin market trends, big predictions, and what's next. Let's dive in and see what unfolds.
So you're thinking
Yeah,
Q2.
when you put the single one, it should just be, the RV FOMO index because
And if it's like 4.5, get the fuck out.
Yeah, that's right. Or realize that you should get rid of your spot positions and own a call option instead, or whatever it is.
Yeah, yeah. So you're looking at Q2 now. It's kind of like where you've arrived at where you think
Not
markets.
100%, but we're kind of erring that way. I mean, definitely Q1, but it's looking like it might run all the way through till, you know, end of H2, which kind of makes sense. Again, the ISM, the business cycle is the driver of speculation, risk, excess capital, all of that stuff, because people have higher earnings. We're not positive yet. So although tech stocks have done well, stock markets have done decently well, Main Street has not. Businesses are still struggling.
Yep.
But once that turns, and I think the Federal Reserve will be cutting rates because, as we've been saying for a long time, Julie and I, inflation is coming lower, and it is, then we will see Main Street or people with mortgages, household income increasing, and that pushes people out the risk curve, and that's what drives the real cycle, particularly the alt season. So alt season we find is highly correlated with ISM,
Yeah.
and it makes sense. It's just, have you got
That
more
chart
money
on
to throw into the market?
the chart on Bitcoin or Ethereum Bitcoin too is very interesting, right? So you can see
Yeah.
it's impulse higher sideways range right now. It just looks like that is a flag ready to break out again.
Yeah, and I've got the same, it's the same as the Bitcoin dominance chart. To me, it's either forming a large head and shoulders top or a GMI crash pattern, which is the fall, the rally, the failed new high, and then
again.
a big move lower. And it would make sense. But we need the ISM, we need disposable income or disposable earnings to rise so people can recycle capital into more speculative things. Because right now they're still struggling to pay for a steak dinner because it's $150 fucking dollars for a steak in the US. It's it's a big issue.
Bitcoin's price is under pressure after U.S. President Donald Trump confirmed military strikes on Iran's nuclear facilities. The news triggered a sharp sell-off, pushing BTC below $102,000 and fueling fears of a deeper drop. As tensions escalate in the Middle East, traders are eyeing Bitcoin's reaction closely. Historically, geopolitical uncertainty has sometimes acted as a springboard for Bitcoin, especially in times of global conflict. But this time the picture looks more fragile, at least in the short term. Some traders, like Cass are bracing for further downside. He suggested a potential dip to the $93,000, $94,000 range before Bitcoin finds solid ground and possibly rebounds. Still, he placed only a 20%, 25% chance on this more extreme move. Others are drawing comparisons to past geopolitical shocks, like the Ukraine war in 2022, when Bitcoin surged 42% in just over a month despite a bearish market. Now in 2025, with BTC still holding above $100,000 and the bull market technically intact, some traders wonder if history could repeat itself. But for now, Bitcoin's price action remains uncertain. Support around $97,000 could prove critical. Analysts warn that a break below $93,500 could hand control back to the bears unless the bulls defend $104,500 strongly. The next few days could shape Bitcoin's path ahead.
So let's go through some of your charts, some of your framework, because I think people are going to love to see the work that you put in. I don't know where you want to start with that deck or whatever you think the best narrative are.
Well, I think we could sort of start with just the actual risk framework that I built, looking at global liquidity first. So it's interesting what you're saying about, the sovereigns in the Middle East, because it's very much when you hear about the Middle East and crypto, it tends to be very, very Bitcoin orientated, right? So you've got United Arab Emirates and I think Bahrain are heavily investing into Bitcoin mining, and it just seems to be sort of very, very Bitcoin focused. But like, you're not hearing the stories like what you're relaying here coming out about the usage in government departments. So that's extremely interesting. Very,
It's
very
been
cool.
it's been mandated by the sheikh. The ruling families have essentially said the future of the Middle East. I've always been bullish on the region because I think they're figuring out, what the world looks like without the oil and how do you invest the oil capital more efficiently. And they are just like, our future is AI because we've got endless energy right now. So we can do endless compute and
Yeah.
data centers and all of that. That obviously plays for Bitcoin mining, but they have a lot of free cash flow and they want to become more modernized economy. So they're like, well, we'll build on blockchain rails and use AI in government. They're already using it in government, in asset allocation models, all sorts. So it's really interesting to see how fast they're moving. But yeah, you're right. Most people don't understand that they're going to be using a lot of underlying blockchain technology that's not just the storing of Bitcoin for a sovereign wealth fund. And not just using Bitcoin as a reserve asset, but also building the entire government infrastructure on blockchain, driving licenses, property deeds, the whole bloody lot. So it's fascinating to see. And then a lot of people say to me, well, if all of this money's coming in from the sovereigns, that may produce an outside return. And I'm thinking, well, if we're going from 3 trillion to 100 trillion, which is my estimate by just extrapolating out the trend rate of growth, you need larger players each time because the market cap is bigger, right? There's no way you're going to get to 15 trillion this cycle unless you've got bigger players. So it's kind of, I don't think it's what people think it is. I think it's just a function of the size of the market. The bigger it becomes, the more that those people are involved. And the more blockchain technology gets used, the more it uses the alts for infrastructure rails, for new forms of compute and storage and all the other things that are coming. So I just thought it was interesting because everyone's like, oh my God, it's a super cycle because of this. I'm starting to err towards, well, we've talked about this before, a longer cycle, just because the business cycle is still below 50. So generally it takes a while to climb up. And then we use the GMI Financial Conditions Index, and that has a 9-month lead. And with the dollar breaking down, even today, it's starting to suggest that this may go even into Q2 2026. So it's like the whole cycle got shifted because rates didn't get adjusted and the dollar was sideways for a period of time. So it feels that potentially there is a chance, and again, there's no guarantees in this world, that we're more like 2020 than we are in 2021.
Yeah.
Or it's it's spookily similar to 2017 for me. So
Michael Saylor has once again shaken the crypto world, this time with just 4 simple words. We bought the dip. As usual, the announcement came with his signature orange dot graphic, and it quickly went viral. Behind the brief statement is a major move. Strategy has added another 10,100 Bitcoin to its already massive holdings, spending roughly $1.15 billion in the process. This is the company's largest single purchase since March, bringing their total Bitcoin stash to a staggering 592,100 BTC, now valued at over $60.8 billion. The average cost per coin for this latest round was around $70,664. With Bitcoin currently trading near $102,600, Strategy is sitting on unrealized profits of about 45%. Even though Bitcoin recently cooled off after hitting $108,000 last week, the investment still looks incredibly strong. Saylor's bold buying spree in 2025 has seen Strategy scoop up over 140,000 BTC so far this year, ignoring market noise and sticking to its long-term vision. Currently, Bitcoin makes up nearly 59% of Strategy's total market cap, which stands at approximately $103.3 billion. Investors continue to chase exposure to Bitcoin through Strategy's stock, shown by its NAV multiple sitting at 1.699x. While no new purchase came this week, Saylor's message is clear: he's not done buying. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.